is the DeFi Decoded podcast by Ninepoint Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. For the last few weeks, we spent time talking about the lead up to the election, the aftermath of the election, the Trump trade, what it might mean for crypto asset prices. I think we've done enough on that. So we're going to take a little pivot here and go back to the things that both Andrew and I like to talk about the most, which is Web3 builders doing really cool stuff. And today I'm very excited because we are having a long overdue episode where Andrew is going to talk about SX Network, the project that he's been building and scaling for the last several years. So as fans of the show will know, Andrew is the co-host of this podcast and also the co-founder and CEO of SX Network. SX Network is the biggest decentralized sports betting project in the crypto ecosystem, with over 3 million bets placed and over $550 million of volume processed. SX is also coming off their best week ever in terms of transaction volume, hitting more than 6 million for the first time. So we figured that today was as good a time as any to dedicate to an episode purely to SX. So Andrew, welcome to the show.
Good. If you're gonna co-host a podcast, you might as well, market
your own stuff once in a while.
Every year or so, yeah.
I agree. I think last year we did a Web3 book podcast, so where I could shill my book, and now we can talk about SX. But all joking aside, one of the topics we have talked a lot about in the last little while is prediction markets as they relate to the election. Prediction markets, turns out we're doing a pretty good job of pricing probabilities of who was going to win, who was going to drop out, who was going to become VP, and so on and so forth. And prediction markets in a way are kind of betting market. But one of the biggest betting markets in the world, is sports betting. And there hasn't really been an on-chain solution to this until SX came along. So tell us a little bit about that evolution. Like, you've been at it not quite as long as I have, but you've been in this space for a while. SX wasn't the first thing. Tell us a little bit about that journey.
Yeah, totally. I mean, I think, so I started on the sell side at BMO, Bank of Montreal, trading equities and a little bit of time on structured products. And what's actually interesting is I got into the crypto space a lot, partly, I would say, due to your book. And after reading your book, it was interesting. It talked a lot about how, the front end of finance was, essentially had been taken over by the internet. And we measure, and I saw it firsthand on the trading floor. We measure our trading time in microseconds, but then the whole back end is just completely antiquated. And you see that on the trading floor as well. Our settlement time was T+3. When I was at BMO, it was a huge innovation. We got it down to T+2. So that's essentially 2 days to settle. And then on top of that, if anyone's ever worked on a trading floor, particularly anything to do with the settlement aspect of the trading floor, how that you're using software built in the 90s for a lot of this back end plumbing of the entire financial system. Yeah. And so that's kind of how I initially got into crypto, was the combination of reading about blockchains, looking into cryptos more as from an investment standpoint, and then working on the trading floor and realizing sort of firsthand how inefficient the whole financial system was. And that got me down this rabbit hole of becoming really, really interested in what would later become known as DeFi, so decentralized finance. And then kind of realizing that the most inefficient sort of financial market in the world is actually sports betting. So sports betting is quite literally the most untransparent, least sort of democratic, and most inefficient financial market you'll find. And by using the power of DeFi and blockchain and crypto, we could drive massive, literally 20x reduction in cost, and bring unprecedented levels of transparency, and just make a far more fair sort of system for this specific subsector of the I call it a financial market. Obviously, a lot of people don't call it that, but
Yeah, but why do you think sports betting specifically was such an inefficient market compared to say other markets that you were looking at?
Yeah, so sort of the headline stats are when you bet on sports, typically the industry standard take rate, which is essentially we call that VIG as well. You can also think of it as like the bid-ask spread. Yeah. But overall, essentially, the transaction costs in sports betting are typically 5 to 7%. So that's completely insane. When you bet on a match in sports, you're essentially paying an implicit 5 to 7% fee. Whereas when you trade stocks, you're paying less than 10 basis points usually. So that's like the first kind of like headline stat. The thing is, again, most people are just placing like random bets. They don't really, maybe they don't notice, they don't care. I could talk a little bit about like sort of our go-to-market about how we get around that. But for the most part, it's like an insanely inefficient market. The second thing is that there's virtually no transparency. So when you work on the trade floor, you can see the order book, you can see the level 2 depth, you can see all the different trades going through. There's a ton of market data. There's just way more transparency. Whereas with sports betting, there's virtually zero transparency. And then finally, the third reason, which is actually was the short-term reason why I actually got into the sports betting industry, is that the vast majority of sports trading, sports betting, whatever you want to call it, is you're actually betting against the house, right? So like when you bet on FanDuel or Bet365, they're taking the other side of every bet. And so it creates this inherent conflict of interest where they only make money if their users lose money. And so there's just a huge incentive for their users to essentially like make sure that their users lose money. And one of the most insidious sort of aspects of this is the fact that they will essentially ban winning bettors from their platform, or what's called limit. So if you are essentially making a lot of money on like a Bet365 or FanDuel or whatever, they'll actually lower the amount that you can bet on their platform because they just don't want you on their platform. And so the sort of origin story for me of why I like got into SX was when I was working at BMO, myself and my brother, we noticed this discrepancy in the UK election market. So essentially, we figured out that Bet365 was massively mispricing the sort of upcoming UK general election. This is back in 2017 when the incumbent Theresa May had called a snap election. Mm-hmm. And essentially, over the course of 60 days, the Conservatives, which was her party, fell in the polls from about a 15% general election lead to about 4 or 5% going into the final day. And Bet365 was a UK company. And so they actually let people bet on the individual sort of MP races. And so, and with quite large limits as well. And essentially what happened is they had set the odds for all of these different individual MP races at the beginning of the election when the Conservatives were at a 15% national election lead. And then they essentially just never adjusted the odds because, very few people were betting these random MP races. Like it's a pretty random thing to bet on.
Yeah, exactly.
And so myself and my brother, we found about 17 different races that, were massively mispriced. Like they were essentially priced as if the Conservatives were going to win by 15 points in the general election, whereas now they were obviously only at a 5-point lead. They ended up winning by about 3 points, 2 points, I believe. And so we just essentially bet on the Labour Party. This is back when Jeremy Corbyn was the leader. And we bet on like very safe Labour seats that you were essentially getting paid like 50-50 odds on. And what ended up happening is, and again, the delta was that they were priced as if this was like a 15-point national swing election.
Yeah, potential landslide for the Conservatives. Yeah.
And so, they're just priced off a 15-point lead that was now essentially 5. And so we essentially unloaded our accounts. We ended up winning like 16 out of our 17 bets. And I got an email the next day from Bet365 essentially saying that their trading team had looked into our account and they had decided that they were going to ban us, or effectively limit our stake. And when I logged into Bet365,
were they going to pay you out at least for the things? Would they pay you out at least for the bets that you?
Yeah, Bet365 is highly regulated. At least they would pay out. There is a lot of sports books that wouldn't even pay out, which is like a whole other thing, or make it incredibly hard to withdraw. And but they essentially had limited our max bet size on like huge NBA games to like $5. So, and that was kind of like what taught me. At the time, I was a big sports bettor. I didn't really realize. I didn't realize that sports books could essentially just ban you from betting on their platform. I was only like,
well, it's
20 years.
Like, so you started off by saying, that the front end of finance may be digitized in some ways, but the back end is not. And the most inefficient market is sports betting. And in sports betting, that manifests in these really high fees and this sort of clunkier experience. But you're also describing another problem, which is that you have massive counterparty risk because of the intermediary that you're dealing with. And that's something that I think is arguably like the thing that's more interesting about DeFi is that it creates other kinds of risks, smart contract and technical risk and so forth. But you don't have to rely on an intermediary enforcing the terms of an agreement or changing the terms of an agreement if it doesn't suit them. And that's kind of what it sounds like happened here, right? Is that you had an typically the financial intermediary, like the market maker, the agency desk might be trading. They're connecting buyers and sellers. Maybe they are all trading on a prop basis, but like their interest is in creating liquidity. What you're saying here is like their interest is in actually you losing money because you're betting against them directly. And so that creates this conflict and creates this issue. So to me, like it's not just a matter of the tech being inefficient. It's actually an existential, it's like a core problem of the whole proposition, which is that the incentives are not aligned and the intermediary can change the terms of the agreement if it doesn't suit them, right? Is that basically correct?
Yes, yeah, that is. I mean, the space has become a lot more regulated in the last 7 years, and so that aspect of the business has definitely gotten better. Though it's still an issue with a lot of the regulated sports books as well. So it's definitely not gone away. And yeah, the funny thing about sports betting actually is that if you spend a lot of time researching sports betting, there are a lot of opportunities to make money that are actually quite obvious. So for example, sports betting is incredibly fragmented. So what that means is that sports books will often have different odds, like very different odds across platform. And so there's often a lot of just like straight arbitrage opportunities. There's also just lots of what's called positive EV, which is essentially like all the sports books are here, this sports book's here. So if you go on that sports book and bet, you're essentially getting a lot of value because you're betting into odds that are like clearly wrong. So the funny thing about sports betting is if you do spend enough time on it, it's definitely possible to win money, and that's even with these like 5 to 7% VIG that you're paying as well. But the bigger issue is actually getting access to liquidity. So liquidity is actually the bottleneck for most winning sports bettors, because you just get banned off sports books. Like a lot of sports books, their risk management practice isn't let's make our odds better. It's let's just ban winning bettors. So there's just like there's a lot of opportunity in the space. And as someone who's like, done a lot of sports betting, it just seemed like a market that sort of deserved to be disrupted. And on top of that is just like, we can get into why, but there's just so many things you can do to really essentially take out a lot of your cost structure, which you can then pass on to the underlying bettors through essentially better odds, on top of all the like transparency and counterparty risk benefits.
I mean, I can't imagine a market that seems more ripe for disruption, honestly, than the one that you've just described. And isn't also one of the other issues that, like with a lot of these centralized sports betting platforms, you're not betting from a custodial wallet or a bank account that you control. Like, don't you have to deposit money with them? And, it can take sometimes a day or longer many days to get actually paid out on bets. So it's not just that like you're relying on them to enforce the terms, you're also relying on them to hold the money while the bet is ongoing. And that creates like all sorts of other risks as well. So, we've talked a little bit about the poly market and the election forecasting and the election betting markets, and how, you connect a wallet to poly market and you can bet directly from that wallet and you get paid instantly into the wallet. And that's something that one of the things that's attractive about it. And like with sports betting, I imagine it's the same thing, right? Like the idea that not only is it more efficient, not only is it not have the counterparty and centralization risk, but also from a financial rail, it's also better too.
Yeah, for sure. I mean, there's so many benefits. Like exactly like you said, you have the sort of headline DeFi benefits of non-custodial, so better security of your funds, also just easier access to your funds at all times. You have the on-chain transparency aspect. So every bet on SX happens on-chain. And so that type of like data, just in terms of like who's betting on what against who, that used to be entirely proprietary, right? Like only the sportsbook had that data. With SX, all of that data is open and transparent.
Yeah.
We actually have multiple third-party projects that have essentially just built like entire, almost like Bloomberg's for SX, just using our API, because they can just like pull the data and you can see. Which also provides a lot of benefits across a lot of like just for individuals just to even track their own performance. Like it's for most sportsbooks, it's hard to actually see like how well you've done over the last year. Whereas on SX, again, there's like multiple third-party sites where you can just like enter your address and you can see how well you've done over the last couple of years. So there's huge benefits there too. But yeah, I really want to, and then sorry, the third part also is the platform is fully programmable, right? So you can build on top of SX, like it's a fully open garden, which again is like very, very different compared to like the traditional sports betting platforms. Like it's really hard as like a third-party developer to build on top of like Bet365. Like I don't even know if it's possible. I'm pretty much certain they don't have any.
Yeah,
there's no
I mean,
open
is it
API
even possible? Like, is there a way?
No,
to,
it's not.
to do
It's
that?
not. There's no open API you can build on. There's nothing like
exactly.
that. So the fact that it's like an open garden is also just a huge benefit. So I mean, there's just so many benefits, but really the core one I want to drive down into is the fact that we think we can lower the VIG by at least 20x. So we want to get it from the sort of industry standard of 5% to less than 25 basis points. We want to drive like a similar reduction in costs that sort of the internet drove with stock trading. You know what I mean? Like back in like the 90s, there wasn't that much retail participation in stocks because to trade stocks, you had to pay a broker like $500 to $1,000 per trade. And then, the internet essentially wiped those margins out and enabled anyone to effectively trade stocks for $5, or now with Robinhood, it's effectively free. So I think blockchain has a similar sort of transformative potential, but for prediction markets.
And when it comes to fees, like obviously it's great for the user if you can reduce the bid-ask spread and reduce the fees. But as a platform provider, how do you make money in that kind of environment, right? Like you're no longer the house. You're not charging these egregious VIGs. So what is the model? Like how does the thing become valuable?
Yeah, it's a good question. So I guess we should also probably just be clear. SX is a betting exchange, right? So it's a prediction market, or some people call that a prediction market. When you bet on SX, you're betting against other users on the platform. It's like a stock market, but for sports betting. So one of the interesting things that we've sort of come to the realization over the last 6 months was that betting exchanges typically, historically, have adopted like a commission-based model, where essentially, so the most famous is Betfair. Betfair is the largest sort of traditional betting exchange in the world. And it's actually, funny enough, ended up becoming the largest gambling company in the world. It's now called Flutter. So typically betting exchanges charge like a 5%, typically like 2 to 5% commission on winnings. And the reason why they do that is that betting exchanges at scale have huge pricing power because they have inherent network effects, right? So like as you get more and more users to your exchange, the experience of the product actually gets better because it's like a stock market, right? Like the more liquidity begets liquidity. And so as there's more users on the platform, there's more liquidity, there's a higher chance that, if you offer a bet, it'll get taken. It also means that there's more market makers competing against each other to offer better and better liquidity. And so the odds get better as well. And so historically, betting exchanges have sort of monetized that through commissions. What's interesting with SX though is some of the most profitable bettors on betting exchanges as well as SX are latency driven bettors. So they're almost like high frequency trading, but for sports betting. So they're programmatic bettors that are plugged into different sort of API feeds, and then they're just taking bets that, according to their data is mispriced. And so what's interesting about that is there's actually a very sort of easy way to monetize for the platform to sort of capture value from those users while essentially subsidizing the product for the rest of the user base. So, and what's interesting with blockchains is you essentially, whenever you do a transaction on a blockchain, you pay a gas fee, right? And if you want your transaction to go faster, you pay a higher gas fee, right? Like it's essentially gas fees meter out this scarce resource, which is block space. And there's just like there's like a built-in essentially real-time auction market for transactions. And so what's interesting, the sort of realization we came to recently was that you could actually you could essentially use that same mechanism for SX, and essentially bettors will pay their own gas fees when they place a bet, and if they want their bets to go through faster, they can essentially pay more in gas fees.
Why would they want to make it faster? So like, let's say for example, I can understand the context just for people who don't know sports betting. I'm betting a future, where it's like, who's going to win the Stanley Cup or something. Like, I don't need to pay up to move my bet ahead in the block. I'm just going to wait, right? But there are other instances where, and especially this is how like a lot of other platforms operate, they do a lot of their volume with in-game betting, where timing is of the essence. So is that kind of what you're talking about?
Exactly. So it's both pre-game and live, but it's definitely
also both. The odds could shift. So maybe you want to lock in odds. That's another reason maybe you wanted to speed it up, right? So yeah, it's also clear to say the gas fees for SX are incredibly little. So for most users, they're going to be paying literally fractions of a penny to place a bet on SX. So it's virtually free. But for certain bettors, especially if there's competition, so what I mean by that is like if there's an opportunity, so there's a $1,000 bet on the SX order book, and call it mispriced by 5%. So that means that you as like the programmatic bettor, if you were to take that bet, your expected like profit from that bet is $50. So what's interesting is you're highly motivated to spend more in gas in order to hit that bet. You might be motivated to spend up to $25, $30 in gas because if there's someone else bidding higher, then they'll get that bet before you. So it's just a natural sort of arms race between different programmatic bettors to get their bets in faster. And so that's kind of like one of the ways we're really interested about sort of like, we call it like monetizing latency. And it's also, if you think about it, the tokenomics model that is most sound is a cryptocurrency that is used to pay for block space. There's been so many other tokenomics models that have been sort of created and tried, but at the end of the day, the model that makes the most sense is that blockchains are scarce resources, right? They're like essentially a distributed database. Yeah.
And access to this distributed database needs to be metered some way. And Bitcoin, Ethereum, the way we meter that is through the use of a cryptocurrency, which you essentially use to get access to this block space. So this is kind of like, to me, is the most elegant way, because SX is a blockchain as well as an app. And so, and it also just happens that the most profitable bettors are essentially like the professional sports bettors on SX and across different platforms, which are very latency driven. And so the gas fee model is both, I think, the most sound sort of tokenomics model that exists, and also happens to be the best way in our specific use case to monetize, while also giving us a hugely unfair advantage, because we're going to be, we are, and we will continue to be the only betting exchange in the world that charges 0% commissions. So we're in a world where like most betting exchanges, charge 3 to 5% commissions, and most sports books, they don't charge commissions, but they have an implicit 5 to 7% VIG. And so that's why we think it's possible to get to less than 25 basis points.
Yeah. Right now, the focus is on sports and a wide range of sports, not just football and basketball, but tennis. For anyone who's watching the video, I'm holding a ball. It's called a Wilson tennis ball. But there's a lot of other things that we now know people are interested in wagering on as a future outcome, right? And, you're someone who's very focused on sports now as a way to open up this opportunity set. But you've also written a lot about prediction markets and how they could help to, revolutionize derivatives markets, right? Like what is an option, if not sort of they're literally called futures markets for a reason, because you're sort of predicting on the future price of an asset, right? And so there's all these examples where marketplaces today could be impacted in some way by on-chain betting. And we know that sports betting may be the biggest for all betting, but in terms of on-chain betting, it's been election betting, right? Because of Polymarket and these other things. So like SX right now, do you view the strategy of focusing on sports, like laser focused on sports, to be an end goal? Or is it sort of prove that you can disrupt this massively inefficient market, build a platform that's used by lay people and professional bettors alike, create technology that can work for everything, and then start to layer in new kinds of markets? Or is it just going to be sports?
Yeah, so it's a really good question. I think initially our focus was kind of on starting with sports and then expanding broadly. The probably our biggest reason why we've survived, whereas tons and tons of our competitors have died, is that they started too general, whereas we were just very narrowly focused on, a specific market that I just know is incredibly inefficient. Yeah. So what's funny though is like over the years, I would have thought that we would kind of like get to the point where, we finished with sports betting. Now we can focus on the other things, but we just keep going deeper and deeper on this specific use case. Yeah. And so I think like at this point, we really are just narrowly focused on sports. And I know like Polymarket's done a really good job with non-sports. To the point that like it also doesn't even really make sense to try to compete with them on these like non-sports markets. There is like a lot of issues as well with non-sports markets. So with sports, it's very like there's not that much ambiguity with settlement. Like one team won, one team lost. That's not the case with non-sports markets. Like besides the election, like betting on like whether they'll find the submarine. For example, like I don't know if you guys remember the submarine that went to go visit Titanic. Polymarket had a market on whether they would actually find the submarine or not. The problem is like, did they find the submarine or did they not really, right? Because they found like pieces of the submarine. And so what you notice with Polymarket is that they get into these huge rules fights where essentially their community will rip each other apart over like how a market should settle. Which then kind of like, if you're on the wrong side of it, you often like lose a lot of faith in the platform. And so I've come to the realization that it doesn't really make sense. It's interesting,
the submarine does make sense. Yeah. I mean, the submarine is a pretty unique example where you can find some or all of a submarine. But like, there's lots of other things where it's like, who's going to win the Oscar for Best Picture? Who's going to win the election? There's certain future events that like, who's going to be impeached? Who's not going to be impeached? I guess we're now slipping back into politics, but there are a lot of, there's a lot of binary markets, I guess, right? Where like there are, winners and losers and yeses and nos, right?
But like one of the big things.
By the way, like sports is just to be clear, like the companies that are in the sports betting market are massive, worth tens of billions of dollars, and they're assets that are prized by media companies and casino operators and all these other things. So like, it's a huge market. I'm just curious if you see the potential, or like you see the translation of this into something else.
Yeah, for sure. I mean, I think the thing we've realized more and more is that like we are so focused on driving down the VIG in sports betting. SX is now typically we typically have the best odds in the world now for NFL pregame betting. So our VIG is now roughly about in the 1% range if you check our odds on Sunday, which is a 5 to 7x reduction. I'm so focused on getting that down to like 0.1% or 0.25% and driving just like an absurd 50x, maybe even 100x reduction on the VIG. And part of that too is that we've mostly become almost like, we've kind of like evolved to become like an institutional betting platform. So we don't really have, like our average bet size is incredibly high. It's like $500 for the most part, which is, again, a huge multiple on a traditional sports betting platform. We're really not like a mainstream platform. We're a platform where really big sort of, what I call institutional sports bettors look to hedge risk, find better liquidity, and actually like care about odds. And so with that, we've kind of realized that there's like two phases to what we're building. The first phase, which is like where we're kind of midway through right now, which is capture this like institutional sports betting market. And we're making a lot of progress there. I think we can, 10x our volume just in that market alone. And I think the sort of like 100x, like the 10x after that is going after the mainstream market, but not directly. So we're not going to, like SX isn't going to be this like, it's not our focus is to be like this mainstream platform that, a million people use. It's actually, we're going to use our liquidity to power thousands of other interfaces that want to essentially tap into our liquidity. Like there's a huge industry in sports betting of white labeling, for example, or they call them skins as well, which is essentially like letting other entrepreneurs create their own sports betting platforms, and then you just kind of handle the whole back end. And so that's kind of like how we think of the market, like dominate the sort of institutional market first, and then make it really easy to repackage and sell our liquidity by powering like the next generation of like interfaces and things like that. So that's kind of like how we view the space. I think like we're pretty, like, to me, it's another thing too, is like sports betting prediction markets. It's like one of the most obvious use cases for crypto. Everyone, Vitalik talked about it in his white paper for Ethereum. And to me, it's pretty clear to me that there's going to be like a huge, 10, $20 billion sort of style winner in this space. Yeah. And our goal is really just to be that winner, right? Like to me, it's very clear that there's going to be sort of the Betfair of crypto. And so our goal is really just to position ourselves to capture that market.
Yeah, absolutely. I love the B2B story as well, right? The idea that, look, you're creating the most efficient platform, the best odds, and that's something that everyone wants. And everyone wants access to that liquidity, right? Is that basically? Yeah, and it's like
and it's also a way, like, it's kind of what you're seeing in DeFi more generally, which is, Aave is like a lending, the leading lending protocol. They're increasingly like working with a lot of like traditional TradFi firms to launch their own, interfaces, to like hook into the Aave liquidity or even create their own. So I think that's like a pretty interesting model that makes a lot of sense to me. Because like at the end of the day, I think we have the opportunity to build the global liquidity hub of sports betting. I think like we're very narrowly focused on that. And our sort of talent isn't in, frictionless mainstream applications. Like there's other people who are much better than at that. Nor is it like mainstream marketing. So like for us, we're just very narrowly focused on being the most liquid place in the world, because that also has the most network effects, right? Like it's to me, it's the most defensible. And then from there, it's kind of like we're going to look to others to sort of, use that liquidity to build their own sort of mainstream applications. And so, yeah, I think it's like a very targeted, specific plan. And seems to be working so far, but we'll see.
Yeah, seems to be working. That's for sure. I mean, as we said at the outset, right? $500 million of bets, $6 million a week. So this model, this hyper-focused model is clearly working very well. One final thing I wanted to talk about, which is there's an SX token. And I find this SX token to be really interesting for a few reasons. I'd love you to just describe like what it is, how it works, why it's important, and so forth. But to me, it goes back to the original dilemma that existed with sportsbooks, which is that they are negative sum by their nature, right? It's like not only does someone win and someone lose, but there's also this extraction mechanism where value is being removed entirely from that transaction. And that's something that, seems to be kind of predatory in a way. Now, with your platform, those fees get reduced close to zero. But there's another mechanism that's happening, which is that the more that people bet, the bigger contributors they are to the network effects of the thing you're building, the more they can actually earn of the platform. They can become stakeholders in this network. And in a way, it kind of turns something that was negative sum to zero sum to almost positive sum, right? Where like, as a big bettor, you're basically like a market maker. And as a market maker, you become an owner. And you've made this analogy before in the past, where if you think about before stock exchanges were public, they were partnerships and used to buy a seat on the exchange. And, that allowed you to do business and transact on the exchange. And that was something that, basically conferred ownership on the largest and most liquid and most active users, right? Similarly with this, like the more you participate in the network, the bigger a share that you own. So what is that like? Talk about sort of thinking that through, building it, and how that works in practice. Like, do you find that ownership is a powerful incentive for people, or is it a nice to have? Is it something that could help to drive new users? Talk about the token for a second, Andrew.
Yeah, so when we launched the token, we essentially a portion of the token was given to past users of the platform. I guess we were one of the, at the time it was relatively new, like retroactive airdrops. And then we ran this like bet mining campaign where essentially as you use the platform, you earn SX tokens. And that was actually a big driver of volume in the past. We've actually stopped that recently. So I should say that that's no longer part of the platform, which is part of the reason why I also just think the platform's like in the most healthy state it's ever been, because there's essentially no incentives at this point to use SX. It's just pure, product market fit, because people find that we have the best liquidity.
Yeah.
But like what's interesting about that is, having run that program plus the airdrop for 3.5 years, is that the token is owned by essentially the community right now, right? Like there's a huge participation across most of our biggest bettors on the platform, and naturally have sort of like earned and owned a ton of SX. So there's a lot of alignment between between the platform and the user base. One thing you actually did talk about that was really interesting, though, was about like this like zero sum aspect of sports betting, which is essentially inherent in it. But one of the things that's really cool about SX is that the typical workflow for an SX bettor is they are winning better. So like they naturally, historically have made money. But their issue is that they can't get liquidity, right? So what's interesting with SX is they can go on SX and essentially offer offer odds that are massively mispriced with the rest of the sports betting market. And then this like second category of stakeholder on SX, which is arbitrage bettors, will then go and take their bet and then go and hedge it off on a traditional sports book. And so the reason why that's interesting is that the winning bettor has gotten access to liquidity, and presumably if they're like, a consistently winning bettor, they'll make money over long term. But then what's interesting is that the arbitrage bettor is actually also going to be positive because they've taken the bet from the winning bettor and then they've hedged it off on one of these one of the normal sports books, and they essentially like capture a really small spread. And so what's interesting in this model is that the winning bettor gets what they want, which is liquidity, and the arbitrage bettor captures a tiny spread. And really the only loser in this transaction is actually the sports book because they've essentially taken action effectively that they didn't want, right? Like they banned the winning bettor, but the arbitrage bettor has essentially taken their action and then hedged it off on the sports book. So it's kind of this interesting model where the sports book essentially loses and the arbitrage bettor and the winning bettor both win. Yeah. That's only possible if you drive your margin on commissions to zero, which is again what we've done. And so that's like one of the biggest benefits. It's actually, I would say, like the huge kind of like, I call it unfair advantage of SX, is that we just like, we're cutting things so absurdly close to the bone on VIG. Like we're trying to essentially drive 50 to 100x reduction in the cost. And so you get some like really interesting behavior that becomes possible when you do something like that.
Yeah, amazing. That's a great explanation, Andrew. Okay, so we're kind of running out of time, but I do want to know, like, you've gone through different technical implementations of this, right? Like we've talked at length on the show about different blockchains and so forth. Now everything has moved on to Arbitrum, right? Is there any, so there's like, there's customers, product, and tech, right? So it's like you've got users, they want to use the product because it's better. The product itself is offering, superior odds to everybody else. So you've got this product market fit. Do you have the tech to scale it? Like, can you take it from 6 million in a week to 60 million a day or 600 million a day? Like, is there any governor on your growth from a technical perspective right now?
So yeah, that's like, that's kind of historically, there's been a huge bottleneck, which is just blockchains don't scale. So that no longer exists. Well, I shouldn't say it no longer exists, but blockchains are far more scalable now than they were 5 years ago. And we know this, like we built SX initially on Ethereum mainnet, and then we migrated from Ethereum mainnet to Polygon POS. Then we ran into issues with Polygon POS, so we launched our own chain. And then finally we've migrated from our own chain to our own L2. In the process, the sort of gas costs have gone from on Ethereum, $50 to now fractions of a penny on our own L2, which is called SX Network. And block times have gone from 15 seconds on Ethereum to 250 milliseconds on SX Network. So everything is far more scalable. And it's kind of like, it's finally like this subsector of the crypto market, in my opinion, is finally ready for its sort of growth inflection. And, we've been grinding on this for 7 years now, which is like 30 years in a normal industry, I guess, in terms of crypto world.
Yeah, well, you still look youthful and full of energy, even despite the many years of sort of building and so forth. But yeah, look, I mean, I'm fond of saying there's nothing so powerful as an idea whose time has come again. And I feel like, I remember, like we talked about prediction markets and betting markets and making more efficient transactions and smart contracts for all sorts of, agreements in like blockchain revolution. And we got that from the Ethereum white paper and from the early sort of work that was happening at Consensus and some of these other projects and from conversations with those people. And we talked about a lot of this stuff. And it's been really amazing to kind of watch this evolution happen in real time. I have a front row seat, as do all the people who listen to DeFi Decoded, into this story, right? Like, people maybe know me as someone who's written a couple of books on the topic. I come at it from a financial services and kind of high level perspective, impact on enterprises and industries and so forth, but you're actually building something, right? And this something is now hitting this kind of inflection point, the steep end of the hockey stick, and it's pretty exciting. So for everyone who's listening to the show, who's stuck with us through this episode, and I'm sure there are many of you, thank you very much. Anybody who's new and was surprised by that, not aware that Andrew's got this business, this project he's building, do check it out, sx.bet. Andrew, where else can people learn more about what you guys are building?
So you can find us on Medium as well as Substack if you look up SX Network, and we have a newsletter called SX Weekly where we go through all of our stats as well. And then you can find us on Twitter. It is at SX_network, I believe, as well as it's got links to everything from there. So it's lots of stuff going on. It's a team of 13 of us in across Canada, and it's been a fun journey for sure. I've definitely enjoyed our podcast. Gives me some time to do a more broad sweep of the crypto space instead of just being way too drilled down on the specific sort of subsector. But I'm looking forward to continuing.
Well, you know what? We've had some pretty special guests over the years. And, we've also had a lot of projects that are really promising, but pretty early stage. And I just think about SX in the context of half the guests that we've had. I just think you guys are light years ahead of so many other people who are actually building stuff in Web3. The application layer is the thing that's going to drive users. And whether those are users who are interested in gaming or finance or, want to throw their latent computing power into a network, or they want to bet on sports. These are all the things that are driving people into this ecosystem that, want to use these apps. So you're doing good work for the industry too, for Web3, for DeFi, and you're helping to decode it along the way with me. So I appreciate that too. That's it for this week's episode of DeFi Decoded. I'm Alex Tapscott here with SX co-founder and DeFi Chat Andrew Young. Thank you very much, Andrew. That was an excellent discussion. We will see everyone next week. We got more guests back to our resuming our original programming. See you next time. Take care. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.